The three white soldiers candlestick pattern is a popular pattern among trend traders as it suggests momentum and strength in a new trend, and some technical traders believe that three higher closes is the official definition of an uptrend. So this is a three candle bullish pattern that should occur in a downward trend. Steve Neeson, author of Candlestick Charting Techniques, suggests that the downtrend does not need to be a long one, so we're going to define the downtrend as the presence of a new 10-day low. The three white soldiers formation should consist of three or more candles with consecutive higher opens and closes. Each higher open should occur within the body of the previous candle. This is according to most sources on the matter. So this pattern clearly shows a change in direction, a strong change, and it's a pattern that is always very visible on a chart. Here's an example in corn where three white soldiers set the stage for a continued upward rally. The third white soldier is underscored by the green arrow. So we have coded the formula for the three white soldiers candlestick pattern. We can now test the pattern on historical data. In our first test, we will buy a security on the close of the third white soldier, and we're going to hold that trade for one whole day. As you can see, doing so produced an average loss of 0.07% in our 21 markets, with a win rate of 47%. In stocks, the signal preceded an average loss of 0.08%, and the win rate was 49%. With a 3-day holding period, the pattern performed much better on our 21 markets. We recorded an average profit of 0.28% per trade, with a much improved win rate of 57%. And our best performing symbol was corn, closely followed by crude oil. The pattern did much more poorly in S&P 100 stocks, where it preceded an average loss of 0.32% per trade and a 51% win rate across 257 signals. With a 5-day holding period, the three white soldiers pattern preceded an average gain of 0.57% per trade in our 21 markets with a win rate of 55%, but we saw an average loss of 0.41% in stocks with a win rate of 49%. The three white soldiers pattern preceded an average gain of 0.55% in our 21 markets with a holding period of 10 days with a win rate of 52%. However, the strategy performed poorly again in stocks as it was unable to beat the benchmark 10-day return. These results are mixed and somewhat unusual. You can see that the pattern is a fairly strong one on futures, but it performs consistently poorly with individual stocks. This could be evidence that trend-following strategies are more suited to futures than shares. Having said that, this is also a fairly rare signal. Altogether, the popularity of this pattern does not seem to be completely justified, especially in S&P 100 companies. Next up, we'll look at the three black crows pattern.